Hello students. Next we'll start with the third unit, okay, financing decision. Already we have finished the second unit, that is time value of money, right? I hope you all are clear with that. So next we'll start with financing decision. Okay, what all we are going to study in this, we will see further. So first we have in this chapter it is leverages, okay? Mainly you are going to study three leverages here: operating leverage, financing leverage and combined leverage. Okay, on that only we have problems on this chapter. So let's see introduction of it. Why the leverage is being introduced. Okay, it is one of the instrument which will help us, or which influences the earning capacity of the firm here. Okay. So earning per share depends upon the efficiency of the company. So earning per share of the company, normally it depends upon the efficiency, how much efficiently the company is working here. Okay. So earning per share is influenced by changes in the revenues of the sales. Okay, earning per share, what it mainly depends upon the changes in the revenues. Okay, how much sales we are going to change, how much revenues we are going to earn. So therefore an investor is interested in knowing earning per share. Any investor it might be, they are interested to know more about the earning per share, how much they can contribute and in what way they can earn the amount on that. Okay, means each share how much they are going to get a returns. So to know how the earning per share is influenced by changes in the sales revenue, so this technique being introduced, that is called leverages here. Okay, so let's see the meaning of it. It refers to influences or force, or it is a power. It is a kind of instrument used to get the desired result. Okay, it is a kind of instrument we call it as, which is used to get a desired results here. In financial analysis, the term leverage means influence of one financial factor or variable of one financial factor or some other related to financial factors. For example, sales related to revenue, and or operating profit related to net sales, like that. Okay, EBIT, earning before tax, all these things, one will be related to another. Contribution will be related to sales, fixed cost will be related to contribution, like that. The different factors are related, that we are going to study under leverage. Means leverage, it is an instrument which will help us to know the relation of different financial factors here. Okay, so let's say the definition of it according to Charity and Rodin. Leverage is a tendency of the profit for change at a faster rate than sales. Okay, it is a tendency of the profit, means earning more profit. Okay, that is a tendency which will help us to earn the more profit here, faster than the normal sales here. Then according to Solomon Irza, leverage is the ratio of rate of return on shareholders equity and the rate of return on total capitalization. So normally, as I said, leverages help us to study the ratio between or relationship between two or different financial factors here. That only they have explained in this definition. Leverage is the ratio of, means which shows the relationship of rate of return of shareholders on their equity and the rate of return on total capitalization of the firm. Okay, so next we'll see types of leverages. How many types of leverages we are having? Totally 5 types: return on investment leverage, assets leverage, operating leverage, then financial leverage and combined leverage. So we are going to study mainly on 3 leverages, that is operating leverage, financial leverage and combined leverage. Okay, first 2 are just a theory part you have, the rest 3 you have a sums on it. Okay, so let's see return on investment leverage, what it is. The return on investment leverage is the result of assets turnover and profit margin. Okay, so what we're going to study, what it says, it is the ratio between the results of assets turnover, means how much you have invested on that asset, how much you're going to get a return on it. Then profit margin, how much you're earning a profit margin on that. The return on investment leverage is an index of operational efficiency of the concern. So what it is, the return on investment leverage is an index which shows us the operational efficiency of the concern or business concern. How we are going to study this leverage then? Return on investment leverage will be calculated with the help of EBIT, earning before interest and tax, means before paying the interest and tax interest to the shareholders or debentures, okay, and tax to the government. Before that, how much the company is earned, that we are going to consider here, and that will be divided with the total assets, total value of the assets, and into 100. Okay. And second leverage we have it as assets leverage. Okay, it is the ratio between sales and total assets. Okay, previous one was like relation between or ratio between the EBIT, earning before tax, and total assets. Now it is assets leverage, means it is the ratio between sales and total assets here. Okay, it is used to compare inter-firm performances. Okay, within a industry, within a business firm, inter departments will be there, right? Different departments performances can be verified. Okay, then how we are going to calculate this leverage, asset leverage? Sales divided by total assets into 100. This is the formula to calculate assets leverage. Okay, but we don't have sums on these two leverages here. So next leverage we have it is operating leverage. On this you have a problems to solve. Okay, it is concerned with the operation of any firm. The cost structure of any firm gives rise to operating leverages because of the existing of fixed nature of cost. Okay, so operating leverage, mainly we are going to concentrate here on earnings or EBIT, earning before interest and tax, before paying the interest and tax, only with the operating activities, only with the operating cost, how much profit or how much earnings the company is having. In short, change in profit due to change in sales is known as operating leverage. So you can write for 2 marks this only. In short, you can write it as operating leverage. It is changes in the profit due to the changes in the sales. So next we'll see definition of it. Okay, definition of operating leverage. Hampton defined operating leverage exists when changes in revenues produces greater changes in the earning EBIT, means earning before interest and tax. So operating leverage, when it exists, when there is a heavy changes, means when there is a changes in the sales, makes the greater changes in the earnings of the firm. Okay, means profit earning capacity of the firm. When it make greater changes, then this operating leverages exist, means which will be created here. Then Solomon Isra defined operating leverage is the tendency of operating profit to vary disappropriately with the sales. Okay, means which will change, okay, according to the sales. Operating profit means he defined it as a operating leverage which will be calculated with the help of operating profit here. Okay, so operating profit which vary means which changes along with your production or along with your sales or along with your revenue. Okay, if revenue changes, along with that your operating profit also will changes. So with the help of operating profit, we are going to calculate the operating leverages here. So we'll see the formula next. Okay, so operating leverage has an impact mainly on fixed cost, variable cost, and contribution. These are the three things which will impact more. Okay, then higher the operating leverage indicates higher the amount of fixed cost and reduces the operating profit and increase the business risk. Okay, so higher of operating leverage, what it indicates the higher fixed cost and which reduces, means which will show less variable cost or less operating profit, and which will shows that business is at high risk. Okay, so operating leverage, how to calculate? Contribution divided by operating profit, means EBIT, earning before interest and tax. Or you can calculate it like this also, operating leverage equal to sales minus variable cost, means contribution. How we are going to calculate? In sales you're going to less variable cost, then you'll get a contribution here. So if we don't have the contribution, directly you can go with the sales minus variable cost. Then EBIT, earning before interest and tax. Operating, instead of operating profit, you can take sales minus fixed cost minus variable cost, means all three, if you all two, fixed cost as well as variable cost. If you less with the sales, then you'll get operating profit. Okay, so these are the two formulas. We'll go with the first formula itself, contribution divided by operating profit. Okay, so what are the advantages of this operating leverage? It indicates the effect of a changes in sales revenues on the operating profit, means which will shows us the effect of how it affects the changes in the sales on profit. Okay, or operating profit. It also helps in measuring the business risk, whether the business has high risk or at the low risk. That also we can measure with the help of operating leverage. As I said, higher the operating leverage shows, higher the risk, lower the operating leverage shows, lower the risk in the business. Then what are the disadvantages we have of operating leverage? Accounts are not given details of the fixed cost. Fixed cost details are not given in detail, means accounting matters will not be given here. Then it is very difficult to calculate contribution from each product and also difficult to calculate the firm's operating leverages. Okay, calculation of contribution, it is very difficult because every time you have to calculate for each and every product, so it is bit lengthy process and it is difficult to calculate the contribution for all type of products here. Okay, the next we have degree of operating leverage. It is defined as percentage change in the profit resulting from percentage change in the sales. It may be put in the formula as percentage of changes in the profit and percentage changes in the sales, means it is the ratio between degree of operating leverage. What you can say, it is the ratio between or the relation between the percentage changes in the profit and percentage changes in the sales here. Okay, the next we have how to calculate operating profit. Now we have the format here. Sales, in that sales we are going to less variable cost, then we'll get a contribution. In contribution, if you less fixed cost, then you'll get operating profit here. Okay, let's see the first problem here. Calculate contribution, operating profit and operating leverage. Sales, they have given 75,000 kgs per kg, it cost 15 per kg. Then variable cost rupees 5 per kg and fixed cost 2,50,000. So let's see the solution of it. Calculation of contribution and operating profit here. Okay, so first you should write sales value. Sales equal to 75,000 kg they have given into 15 per kg. So how much we will get? 11,25,000. Less variable cost. Okay, less variable cost, how much we have? 75,000 kg into 5 per kg, because they have given, right, variable cost, it is rupees 5 per kg. So 75,000 into 5 per kg, so you'll get 3,75,000. So how much will get a contribution now? If you less it, you'll get 7,50,000. In that you have to less fixed cost. How much we have fixed cost here? 2,50,000. So how much we have operating profit now? EBIT or operating profit. Okay, it is 5 lakh. So with the help of this, we have to calculate the operating leverage now. Operating leverage equal to contribution divided by operating profit, right? This is the formula we have. Operating leverage equal to contribution divided by operating profit. So operating leverage equal to contribution, how much we got? 7,50,000, and operating profit we have 5 lakh. So operating leverage we have 5 times. Okay, we have to mention it in times leverages. So we'll see the next problem. I hope you are clear with this. In the sales, you're going to less the variable cost. You'll get a contribution. In that, you're going to less fixed cost. Then you'll get a operating profit. That contribution, then operating leverage, how to calculate? Contribution divided by operating profit. Okay, so 7,50,000 divided by 5 lakh. Contribution already we have calculated here. It is 7,50,000. You have to divide it with a 5 lakh. That is operating profit. You will get a 5 times. Okay. Then we'll see the second problem here. Calculate contribution, operating profit and operating leverage. Sales, they have given 20,000 kgs at rupees 8 per kg. Variable cost you have rupees 2 per kg and fixed cost 30,000. Okay, let's see the solution of it. Calculation of contribution and operating profit. Okay, sales, we have 20,000 kgs into 8 rupees per kg. So you'll get it as 1,60,000. 20,000 into 8. Okay, 1,60,000 less variable cost 20,000 kg into 2 per kg, rupees 2 per kg. So you'll get it as 40,000. So contribution, how much we have? It is 1,20,000. Okay, less fixed cost, we have it as 30,000 fixed cost. So if you less it, how much we will get? Operating profit, it is 90,000. Okay, so then we will calculate the operating leverage here. Contribution divided by operating profit. How much we have contribution here? 1,20,000 divided by operating profit we have 90,000. So how much will get operating leverage now? 1.33 times. Okay, I hope you are clear with this. If you have any doubt, get back to me. Okay, next third and fourth, which you had to solve. Okay, calculate contribution, operating profit and operating leverage. Sales, you have 30,000 kg, 10 rupees per kg you have. Variable cost rupees 4 per kg and fixed cost you have 50,000. Okay, for variable cost you should multiply 30,000 kgs into 4 per kg. And for fourth problem also, calculate contribution, operating profit and operating leverage. 50,000 kgs you have, 15 per kg it is. So sales 50,000 into 15 you have to calculate. Then variable cost 50,000 into 6 per kg. Then fixed cost 80,000 you have, which you have to less. Okay, then you have to calculate operating leverage here. Then let me know the answers of it. Okay, meet you in the next class. We'll study break-even points. Okay, till then, take care.